Hey traders, this is Ron Hayden, Market Tamer. Happy Wednesday. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed by your financial advisor. We'll start here with the spiders down a whopping 29 cents. The target right now is the 20-day EMA in red, just like I said yesterday, and the 50-day in orange. We get below both of those, the bears start getting the edge in the daily chart, and the target is the 200-day. And the Qs, while they were up almost 0.5%, there's still no change. It was an inside day. Keep an eye here on the 20-day in red and the institutional 50-day in orange. We get below there because they are both trading together. Target 200-day moving average in purple. Let's take a look at some different stocks because I've been getting some questions on what do trend changes look like. And we have a couple of those to talk about tonight. Here's 3D Systems. Nice cheap stock, $8 instead of everything that's 2, 3, 4, 500 a share. Notice how the institutional moving average in the 200-day and the 50-day in orange, so 200-day purple, 50-day orange, are inflection points. When we gapped below, let's zoom in. When we gapped below because of earnings, yeah, we traded above it, but we ended up closing way down here. We then took 4 months, rallied right back up, stopped cold, then we drop. Then it tries to get back above the 50-day in May, drops, and here we are. If we get above the 50-day, and I don't know why the 50-day in orange and the 200-day in purple, these institutional moving averages, are having such a big effect on this little stock, but it is what it is. You can see it just like I can. So if we get above that orange line, that is a technical trend change. We are into the gap, so the gap fill up around 1060 or so is the target. Then we go to the 200-day here, about 12.25. Then we go to the double top right around, was that 1430 or so from earnings, and here we get above there. Then we go gap filling up here. Just those are upside targets, and that's a long ways off until or even if they ever get hit. But the point of this is, given how rejection, and even rejection just 3 days ago on Monday, when that is broken finally, the sentiment is then changed. So that's how you can spot a trend change. How about NRG, another stock that even 2 months ago was a trend change, a month and a half ago. Here's a 1-year chart. This stock just keeps moving higher, basically staying above the purple line, right? Once the purple line is fractured, that long-term moving average, that's a sign that sentiment is shifting. And I've used this type of example in the past, but here's another one. Breaking of the 200-day, stock goes from 38 to 34. It tries to rally, and today we rolled over, and we even 33.70. What's that closing low? 33.74. We now have a new near-term closing low. I'd have to go back 2 years on NRG and then come into some solid support at 30 from horizontal support at 30, then all the way back down here into the lower 20s, 24, 23. So if I was trading NRG here, this is a problem for me if I'm a bull. The fracture occurred a month and a half ago, and it just keeps getting worse, especially with today's move lower. General Mills was in the news, earnings move, 4% drop, well off the lows, but here's the thing. Once we regained the 50 and the 200, we pretty much stayed above it until we had a bad news here in May, gap down, we went right back up, and then today we dipped down and tested those lows. The real key here is the 200-day. A close below that, and this stock could conceivably fall all the way back into December, which is an unfilled gap, interestingly enough. So on General Mills, I would do something like this and box it. You can see the gap up from earnings here in March actually acted as the low from that gap down in May, and literally the low from today, within reason. So below 48, target 200-day around 46, and then there's no major support till we get back to December. Owens Corning, not a stock we talk about a whole lot, but this one also has a trend change approaching. There's a little spike here in February. The close was 52.61. Then we have one here, 55.59, and we're almost there today. So if I were to round this up, ballpark it 56.5, that's going to clear these inner swing highs. Then the target is, well, maybe up here to 60 and then back up here towards 67.50. But if you look at the volume, 2 big volume days here. So to me, there's certainly some sentiment sentiment change that's now showing on these charts. If these moves would have occurred on little, small volume, I wouldn't worry about it if I was a bear. But if I was a bear and I see these 2 big poles coming in, you've been put on notice. And to seal the deal technically, like I said, 56, maybe 56.15, 56.50, something up there. Just using trying to get a rounder number, 56.5. That's going to be a breakout. Owens Corning could look potentially good here. And then the trailing stop as a trade idea would be the 20-day EMA in red. Here is CLR. We looked at this one a while back. The 200-day acted as resistance in April, came back down. Now we're starting to turn up. Today it did get above the 50-day. The immediate target would be the 200-day. Then we go to this swing high here. Above that, then all the way back up to that ledge, $60 before the stock fell out of bed and went down quite a bit. And SERV, which is Service Master. This is also a trend change type of situation. Since February, the stock has stayed above the 20-day, and then today, nope, we break the 50-day, pick up in volume. The gap fill is still about $1.50 away, but then the 200-day is the target. This would be another example of a trend change. So I think that covers all the stocks I was going to talk about tonight. Hope you find this interesting. Thanks for the comments, and I appreciate all the emails you guys send in asking questions. Have a great day. I'll be back with you tomorrow. Take care.